All comes as trade tensions between the U.S. and Beijing continue to rise now that President Trump enforced a 90-day pause on reciprocal tariffs, except for China. For more on the latest developments on the market, tariffs, and the trade war, we're joined by President of TAMMA Capital, Paul Fenner. Thanks for being on with us.
Hi, Rochelle. Good to see you.
Unending volatility. When could we see some stability, in your opinion?
I don't think we're going to see it anytime soon. And as we talked earlier this week, I think that this uncertainty that surrounds the tariff still and the markets will just continue to go on. And businesses, as JP Morgan pointed out, and they will announce earnings either tomorrow or early next week, will probably be saying the same thing with the businesses that they work with, that business is just frozen right now. Companies don't know what to do as far as capital plans, investments, hiring, and that's going to have a trickle-down effect in the economy. We're already seeing confidence surveys from the University of Michigan near like all-time lows. So while that can impact what's going on with the markets, sometimes those two data points can be disconnected.
The market closed just moments ago. Are you surprised with where things stand?
No, I'm really not. I thought that yesterday was what we would call a relief rally. So when the news came out that President Trump and the administration was putting this 90-day hold on tariffs, the market was, I think I mentioned it to you guys, that the market was only one tweet or one rumor away from either going up 10% or going down potentially 10%. And that's exactly what we saw. And I think what the market is probably reacting to today is we still have 10% tariffs. The tariffs on China have gone up extremely high, and we only have this 90-day pause. And so it's still unclear whether that's going to be permanent, or are those tariffs going to take effect, these reciprocal tariffs that were so high that the market hated almost a week ago, will they be coming back? And that's what we don't know. And going into this earnings season that's kind of started, that really kind of gets kicked off tomorrow with the banks, a lot of companies that would provide guidance aren't going to be providing that guidance on their corporate earnings trends. And so that's going to be potentially another leg down over the next 2 to 3 months as we go through earnings seasons, with companies not giving us any idea of what to expect, because quite frankly, they don't know either.
I feel like you have two primary groups of people right now: those who can kind of sit back and say, oh, this may impact me with inflation, the cost of things, whatever it may be. And then you have another group of people, they're constantly checking their 401k balance. They may have investments that they can't help but log in and keep constant tabs on. What do you suggest people do when it comes to their investments if they're very emotionally invested, no pun intended there, and they find themselves kind of obsessing with checking those accounts?
Yeah. Checking your account excessively, like meaning more than once a day or even once a week, it's just going to drive your emotions that much higher. And when you get to that point, that's when you're likely to make a financial mistake. And as I pointed out earlier this week, the stock market investing is a 10, 15, 20-year investment vehicle time frame that you're looking for. So again, it comes back to understanding what your plan is and having your asset allocation aligned to supporting that plan. So I work with families that are already in retirement. I work with younger families. I work with mid-career professionals. Everybody's got a different story. But what we center the financial plan around is your purpose and objective, and aligning your assets, your portfolio to that plan, to those objectives, as I mentioned. And so checking that excessively, again, can lead to that higher range of emotions, and that leads to probably doing something not good or not in your best interest.
All right, Paul Fenner, president of TAMMA Capital, thank you. We appreciate your insight on this.
Thanks, Rochelle. Good to see you.